Before a war begins, money moves. Before missiles launch, markets react. Before governments speak, decisions are already priced in. Right now, the world is holding its breath. Tension between Iran, the United States, and Israel is no longer just a political headline. It's a financial signal. It's an energy shock waiting to happen. It's a geopolitical fault line running directly through the global economy. You won't see the real battle on television first. You'll see it in oil prices, in defense contracts, in gold charts spiking at 3 a.m. Because modern war doesn't start with explosions. It starts with positioning. And the people who understand this early don't panic. They prepare. This is not just a story about conflict. It's a story about fear as currency, about instability as opportunity, about how global tension redistributes trillions before the first official announcement is ever made. If you want to understand where power moves before profit explodes, if you want to see the economic shifts before the headlines catch up, subscribe to Before Money, because by the time the world realizes what's happening, the real decisions have already been made. So this is where it begins. No countdown, no warning, just tension in the air. Let's go. The world never begins a war with an announcement. It begins with a rumor, a radar signal, a naval movement, a closed-door meeting that runs longer than expected. Right now, somewhere between Tehran, Washington, and Jerusalem, decisions are being calculated in silence, and markets are listening more carefully than politicians. Oil traders wake before generals do. Currency desks react before missiles are armed. Because modern war does not start on a battlefield. It starts in pricing models. Every whisper about Iran, every statement from the US, every movement near Israeli borders, billions shift in anticipation. The Strait of Hormuz is not just water. It is a pressure valve for the global economy. Roughly a fifth of the world's oil flows through it. If tension escalates there, fuel prices spike in Tokyo, inflation trembles in Europe, and Wall Street tightens its jaw. Fear is the fastest asset class. It appreciates instantly. It multiplies through headlines. When analysts speak of escalation between Iran, the United States, and Israel, investors do not wait for confirmation. They move capital into defense stocks, into gold, into energy. The battlefield becomes financial. But what makes this moment different? It is not just military capability, it is automation, drones, cyber warfare, AI-assisted targeting systems. War is no longer only physical, it is digital, and digital wars scale faster than anyone expects. Imagine a single cyber strike disrupting oil infrastructure. No explosion on camera, no dramatic footage, yet supply chains freeze, insurance premiums surge, shipping halts. Fear becomes measurable in dollars per barrel. Israel views existential threats differently. The United States calculates global balance. Iran measures strategic survival. 3 perspectives, 3 security doctrines, 1 volatile triangle, and global markets sit directly beneath it. Military budgets do not shrink during uncertainty. They expand. Every rising tension unlocks emergency appropriations. New contracts, new weapons systems, new research funding. Defense corporations prepare years ahead. They plan for instability as a long-term revenue model. But here's the paradox. Total war would destroy markets. Sustained tension sustains profit. The world hovers at the edge. Not falling, not retreating. Permanent brinkmanship. The phrase World War III trends online. Search engines spike, gold rises, oil futures climb, even if no shot is fired. Because the idea alone reshapes portfolios. Behind every escalation scenario is a spreadsheet. How much would oil rise? What would happen to shipping insurance? How would central banks respond? Fear becomes data. Data becomes leverage. The United States holds unmatched military power. Israel holds advanced regional capability. Iran holds asymmetric tools and geographic leverage. Each side knows escalation carries costs. But each side also understands perception as power. Markets are hypersensitive to perception. A speech can move billions. A misinterpreted satellite image can trigger panic. We no longer wait for confirmation. We price in possibility. Defense contractors see rising valuations. Cybersecurity firms see expanding contracts. Energy producers see opportunity in volatility. When the world feels unsafe, certain sectors thrive. The public sees danger, investors see risk management, governments see deterrence, corporations see supply chain recalculations. Every crisis operates on multiple layers. The danger is not only missiles, it is miscalculation. In a world of instant communication, one wrong interpretation travels faster than diplomacy. A drone launch, a cyber intrusion, a retaliatory strike. Escalation does not require intention. It requires momentum. And momentum has a financial signature. Currency volatility increases, energy derivatives surge, insurance markets tighten, capital retreats to perceive safety. But here is the deeper tension. The global economy is already fragile. Inflation pressures linger, debt levels remain high. Political divisions intensify. A regional conflict could ripple outward violently, not necessarily into total war, but into prolonged instability, and prolonged instability quietly redistributes wealth. Some investors specialize in crises. They study conflict zones, energy choke points, military procurement cycles. They do not predict war. They predict reaction. The most profitable move is rarely during impact. It is before impact, positioning before fear peaks, exiting before calm returns. So the world watches Iran, watches Israel, watches Washington, not only for military updates, but for market signals. Could this become a global war? Strategists say large powers avoid direct confrontation, but proxy conflicts expand. Cyber operations intensify. Economic sanctions multiply. The sanctions themselves are financial warfare. They restrict trade, freeze assets, disrupt currency flows. They reshape economic alliances, and alliances shift global power balances. Energy partnerships realign. Defense treaties strengthen. Supply chains reroute. The world rarely explodes overnight. It tilts gradually, until one day, people realize the balance changed months ago. So what truly stands at the edge? Not necessarily apocalypse, but acceleration. Acceleration of military AI, acceleration of drone warfare, acceleration of autonomous defense systems. Technology advances fastest under pressure, and pressure is rising. Every diplomatic failure, every retaliatory move, every headline predicting catastrophe, tension compounds. The real fear is not a single strike. It is a chain reaction. Markets are built on confidence. War erodes confidence. And once confidence fractures, capital moves with astonishing speed. The future may not hold global destruction, but it may hold a new economic order. Energy realignments, defense dominance, permanent digital warfare. History shows that great shifts rarely announce themselves clearly. They unfold under stress, under tension, under fear. Right now, the world stands in that tension, not in declared war, but in calculated uncertainty. And uncertainty is expensive. It raises borrowing costs. It increases defense budgets. It restructures alliances. The battlefield is no longer just land or sea. It is economic influence, technological superiority, narrative control. If escalation occurs, oil could surge dramatically. If diplomacy prevails, markets could rebound sharply. Volatility is guaranteed either way. The most powerful weapon today may not be a missile. It may be leverage. And leverage exists in energy routes, in financial systems, in alliances, and in perception. The world is not yet in World War III, but it is rehearsing instability. The tension between Iran, the United States, and Israel is not isolated. It connects to global power competition, energy strategy, and technological acceleration. So the question is not simply, will war begin? The question is, who is positioned for its consequences? Because whether conflict escalates or cools, money has already moved. And in modern history, the first battlefield is always financial. Fear amplifies faster than facts. And once amplified, it reshapes economies. The world holds its breath. Markets calculate probabilities. Governments measure deterrence. Citizens scroll headlines late at night. We are not watching the beginning of destruction. We are watching the beginning of redistribution. Power shifts quietly, capital reallocates silently, technology advances rapidly, And somewhere behind closed doors, another decision is being made. Not a declaration, not a speech, a calculation. The edge of global war may never fully arrive, but the edge itself is reshaping the world. Fear fuels spending. Spending fuels industry. Industry fuels innovation. Innovation reshapes power. This is the real tension, not chaos, transformation under pressure. So when you hear World War III, listen carefully, not only for rockets, but for markets. Because money moves before history is written. And by the time history confirms what happened, capital has already repositioned. We are standing at a threshold, not of guaranteed catastrophe, but of irreversible change. And the most dangerous weapon in this moment is not firepower. It is fear. Fear that spreads, fear that prices in catastrophe, fear that quietly redistributes trillions. The question is no longer whether tension exists. The question is, who understands what tension does to the world economy? Because at the edge of conflict, the loudest explosions are often financial. And when the dust settles, whether from diplomacy or escalation, the balance of power may look very different, not because of one battle, but because of how the world reacted to the possibility of one. This is how modern wars begin, in silence, in fear, in markets, and this is how new eras start, not with certainty, but with tension that refuses to disappear. We are not just watching geopolitics. We are watching the future of money being reshaped in real time. Whether war erupts or restraint prevails, the economic consequences have already begun. The edge is here, the world feels it, and history will record that everything changed before anyone officially declared it had begun. This is not financial advice, this is survival advice. When the world talks about war, most people react emotionally. They panic, they freeze, they follow headlines. But markets don't follow emotions. They follow probability. The voice you selected does not support this language. Please click the upper right corner to switch to another voice. Fear is not just a feeling, it is a signal. And signals create opportunity for those prepared to see them. Do not invest in panic. Do not react to noise. Study the flows. Watch the sectors. Understand where governments allocate budgets. Understand which industries expand under pressure. Because in times of global instability, wealth does not vanish. It transfers. History has shown this again and again. Those who understand structural shifts position early. Not recklessly, not emotionally, strategically. Diversification becomes defense. Liquidity becomes power. Information becomes leverage. You don't control geopolitics. You don't control military decisions. But you control preparation. The real edge is not predicting war. It's being financially resilient if the world tilts. Build positions that survive volatility. Avoid overexposure to single narratives. Think in decades, not headlines. Because if the world stands on the edge, the strongest advantage is not fear, it's clarity. And clarity in unstable times is the rarest asset of all. This is channel before money. Stay aware, stay positioned, and never let fear make your decisions for you.